Good morning, everyone, and welcome to the PivotBoss pre-market video for Monday, March 23rd, 2020. I am Frank Ochoa, aka PivotBoss, back from time away from the office here, and good timing right now because things are starting to turn up here on news on the Fed to purchase treasuries in the amounts needed. As Leisman put it on CNBC recently here, open-ended QE. And so this is a zone right here where things have bottomed out a bit, at least on an intraday basis. We've seen a strong pop higher. And one thing I've watched all pre-market here is how price has responded to the previous week's low in the NQ and now in the ES. Those are two key levels here that we will continue to watch, the previous week's lows, because if price can extend above those levels and reestablish early acceptance, that could at least suggest a near-term bounce. A near-term bounce perhaps back toward 2450 to 2500 could be a pretty easy target in the event of a rejection of the previous week's low. So keep an eye on the previous week's low. Right now, that is around the 2258, 2260 zone for the ES. And again, one thing to keep in mind here is that this is an intraday idea because this market has been beaten up. One thing I've mentioned before is until the market starts to see any measurable good news day over day, the market was going to sink quite a bit lower and take out likely those 2018 December lows there. And we've now done that in many of the cases here. We've flushed quite a bit, and now an uptick of good news here is the Fed coming out here and announcing the purchase of treasuries in the amount needed and additional items as well. So again, that's early good news here. Watch the previous week's low. How much do we bounce? Again, even if it's just back up toward the 8-period average, that's 2440, which would be a decent bounce from these lows. One thing to keep in mind is from a long-term perspective, keep an eye on the weekly chart. I will be hosting a monthly market outlook here pretty soon that's going to detail this in much more broader appeal. But one thing to keep in note is look at this expanding range that we've talked about before. Those of you in my room have known that we've talked about that pattern for some time at these turning points ever since it began back in early 2018. This is a good spot here where a low could develop if we start to see an uptick in good news. That could at least lead to some sort of reactionary bounce back toward value, if not through all the way higher. But again, we will continue to see how this behaves moving forward. But this is an early indication of a good spot to do business here, if not at the very least to dip the toe into those names that you're starting to compile in terms of those names that you want to get back into or that you'd like to enter at these levels. So again, just something to consider here from a longer term perspective. If we take a look here at the NQ, you'll see very similar price action here with a little bit of a bounce. This is the weekly time frame, and look where we are right now. We are right at the 200-week moving average. Every time we've seen prices come near that zone, we've seen bounces that have lasted years. Right now we have come to it and below it, and you can see right here again, this is a spot that makes a lot of sense to bounce. We've talked about 6,800 for a while. And we mentioned that that could be the next major target down, being that that was the midpoint of this key range. There was the 100% key range target back to the mid. This would be a spot again from a tech-based perspective where you could begin to dip the toe here and see much more strength. But it looks like again that this market is leading in terms of rejecting the previous week's low. Previous week's low is 68.91. Previous week's close 68.20. We're above those levels now, approaching 980. And again, if the market can continue to find an early low here, for the week, this could be a bounce back week, if not for anything but to bounce back to a pivot range for the month. So again, we'll see how this continues to play out, but early ideas to watch the previous week's low. Now let's take a look here at crude oil. Crude oil has bottomed out over the past week at 2052. This week we saw another flush back down, and it put us down as low as 20.8. We are now at 23 already. That's a plus 1.8% gain. This is another one that looks very good at these levels, especially if you look at a 60-minute time frame. There looks like there could be a lower low failure here, and if price can then begin to pop back above the previous week's close price, that could provide quite a bounce opportunity in the short term. Previous week's close price is around the 2360 zone, 2366. If you can start to get back above that zone, you start to see a bounce opportunity that could take you as high as 28. The last time price got into the 20 half zone, it bounced back toward 28 pretty quickly, and the same could be seen again here. So again, on the short-term basis, again, if you're someone who has a longer-term focus and likes something like USO, this is a spot that looks fairly good. Just to get back to value would be a double from here or more. And so again, keep that in mind if you have a longer term focus. And again, we'll talk more about this as we get into the PivotBoss monthly market outlook, which I'll discuss at some point soon. If we take a look now at lastly at gold futures, and again, the market continues to push higher on the Fed news here. We're seeing a push beyond the previous week's lows and the previous week's closes now in both the ES and the NQ. Over here in gold here, we saw quite a top up here and a big push and flush down. From a weekly chart perspective, again, this has come all the way back to 1450, which is a very good area of support that it bounced off of last time. This could now become a new range for gold where it trades between 1450 and 1700, perhaps building more energy for maybe a push beyond 1700. Again, a failure to hold 1450 could return price back toward lower value, and again, that's a long-term perspective. At the moment, this one here is pushing to the upside and rallying through 1500, and that suggests more strength ahead. It's been coiling up on a 60-minute time frame and the daily chart, and so again, pushing through 1500, 1520 now suggests that this could rally back toward 1560, perhaps as high as 1580, so keep that in mind. A failure to hold 1500, the breakout point, would suggest a major failure there and could return prices back down. But again, right now everything's suggesting strength at this moment. All right, that is it for now. Good luck. Continue to mind your risk, and I'll see you in the trading room. Take care.